Hey guys, welcome back. So we had some significant price action in Bitcoin. Opposite of at least the thumbnail of my last video. I go through most of my accounts every time, but this is where we're going to start. We're going to start big and we're going to get small. Okay. Now this is the count that supports this like going to the moon, right? It assumes an extended wave third and that this right here was a flat for a fourth wave. Okay. You see where I had placed, I haven't touched these labels. I just turned on this video, have not touched the labels at all. Okay. This seems from the macro level like the cleanest way that you can get 5 off of the low. Okay. The fact that that invalidated is telling. Okay. To say that this is 1, 2. Now I have other count and I'll get into it. Okay. But this was what looked to be off of the low like the cleanest way to get there. And then the expectation would be that you put in a 3-wave move down to here. Okay, there's a lot of other things that I go over in the Discord of why we should get down here. Okay, to be bullish. But in my opinion, this move, okay, is not healthy. Okay, if it is not healthy, that likely means that it's corrective, and I'll get into all of that in a moment. Okay, but the expectation from this macro perspective was that you would get a proper second wave. Okay, which still could be the case, but it doesn't look like it from this perspective down here, and I'll tell you why in a moment. Okay, but even a flat, right? If you came down like this, right? We came up, break this high, and we come down in 5. Okay, but we have a problem with that being a flat, and I'll get into that when we get to the smaller time frames. And what has occurred does not appear to be healthy, right? I mean, the other option would just be a simple zigzag, right? You come down like this and a B wave and a C, load up, right? Now it's time to do this count. But this isn't healthy at first glance, okay? So what I'm going to do here is I'm going to relabel this macro chart right in front of you on a better, more legal way, okay, that we could be impulsive. So I'm going to keep the count, all right, but I'm going to change it, okay? So we move these out of the way, all right, and the way to do that then would be that this is a flat, right here, and then your 2 goes here, which means your 1 ends here, and then you have to get 5 out of this, which you can, okay? It would be, you can keep this pivot here, 1, 2. This would be your 3, triangle 4, which ends like right there-ish, okay, and 5, all right? You have another option too. I mean, you can go here, but this looks like a flat to me. But you know, you could do this 1, 2, 3, 4, 5 extended first wave. Call it a zigzag. That's fine. Impulses, zigzags, they look the same when they're just simple and one structured like that. And 3, 4, 5. Okay, doesn't matter. You can do it either way. But that's how you would do it. So you have, where'd my marker go? A 1, 2. Okay, and now you're off into the 3, or another 1, 2, right? And then you'd be off into the 3. All right. So I'll get down to the macro count, or the micro count, sorry, to explain why this isn't healthy. Okay, but that's what this count is now going to be changed to. All right, so let me load up Oh, and of note, okay, one thing to mention here. All right, a couple things wrong per se. It's not illegal, but leads to the unhealthiness of the count. All right, first of all is this triple zigzag here. All right. While I don't like it as a motive wave either, to get a triple zigzag, okay, you have to think about the reason why combination patterns exist in the first place, okay, and especially to be a triple zigzag. All right, the market did not have to give us a flat here. All right, you could have accomplished the same objective with a zigzag or even a double zigzag. Now you would lack some alternation if this was a 4, okay, so because you got a zigzag here and the 2, all right, but you could have gotten up here for a simple B wave pocket with a simple zigzag, right? The guideline, there's no guideline to have to meet. There's no objective to have to meet to get to do a triple zigzag here. Okay, what is the market trying to accomplish by giving you a triple zigzag? That's how you always have to think about combination patterns. Now, is it legal? Is it a way that the market could form this pattern? Yes, which is why it's in this count. Okay, we need some possible way that you can be bullish in this scenario, right? And things start to invalidate. So, and this is the way that you do that. All right. Anyway, let's drop down to a smaller time frame, and we'll talk about this in general. But I wanted to bring up that triple zigzag labeled because it lends towards probability. That's why. Okay, now this here is the micro version of the macro version that just invalidated, right? You can see I put on here, it's invalid, right? Why? Because this was supposed to be an A wave, okay, in 5 waves and invalidated. Now, there's multiple different ways you could label this too, right? You can go 1, 2, 3, 4, 5 like this, right? And this wick is vastly different on different chart. This is a perpetual contract on a small exchange. Okay, that's why that wick got so big. The index chart, the wick's like up here, like it's nowhere near this big. All right, but regardless, that part doesn't matter because 5 is allowed to do that anyway. The index chart it doesn't, but it doesn't matter. Okay, now that we're smaller, okay, we can talk about the invalidation of this and why it's not particularly healthy that it did invalidate if you want to be a bull. All right, so same thing as the macro version here. We got 1, 2, 3, 4, 5. Okay, talking about these yellow labels here. 1, 2, 3, 4, 5. Everything subdivided, counted out on a smaller time frame. Okay. This 5 down. Okay, if you're going to be bullish, this has to be 5 down. You can't say, well, it's a zigzag. Haha, that's how you solve the problem. No. To get a flat, the C wave has to be 5 waves. And when I talk about flat, it's the next count, right? Boom, boom, boom. Okay, for that to be a flat, then this has to be 5 waves. It's a rule. So when this invalidated, right, the expectation first, if we topped up here, that this is A, B, if you were going to make a flat, right, and then come down and C, no problem, but this B has to be 3 waves. Okay, not only did we expand up well past the end of this, which is, in my opinion, this is opinionated. Okay, there's no actual rule for this, but in my opinion, it's egregious. It's well past where a B wave should go if it's going to be a flat. Secondly, what you've now formed with this B wave, you have to have a three-wave structure, right? And all you have here is the beginnings of an impulse, right? 1, 2, 1, 2, right? So the flat is out the window. It's not even going to consider it anymore. We can't even say A, B, C. This count, the way it is completely invalidated, okay? Now I'm going to go to another micro count to show you how this is legal, that it would be bullish, and then we'll talk about the problems that it has, okay? Okay, so this is another bullish count, okay? I've had these the whole time. All right, this is the way that you make everything off of the low bullish. All right, so you have your 1, 2, 3, 4, 5. All right, flat pattern. It ends in 5. It has to. Okay, and now we've started impulsing. 1, 2, 1, 2, 3, 4, 3, 4, 5. You'll go up, and that is likely going to be. I know there's a 3 up here. Okay, but it's probably not. Right, if that was going to be your impulse, it's probably not. Right, this count would evolve to that's another 1. Right, so you got 1, 2, you got another 1. You would get a pullback, 2, and then you'd be even bigger, and you're off into the 3. Right. Now, the problem with this, multiple problems with this, okay? First, let's talk about the 2-4 relationship here. All right. I mean, you could put it here. That's fine too. But like this doesn't retrace very far, right? Which is typical of for a wave to expect out of a wave 1 for a base wave 1. Okay, I'm not talking about a first wave of a third wave extension. Okay, for a base wave 1. Okay, you want the retracement to be deep. The reason you want that is because you need a good base channel. A good base channel is healthy. And I'll change timeframes here and show you what I mean. Okay, so I'm going to go up to, say, the daily. All right. When we eventually make a base channel out of this, okay, you're going to come up here, and if that's your 1, and that is your 2, okay, now that is your channel to progress higher. And you have to come, this eventually has to come out of here, okay, and this should not break, even if this is a 1, 2, right? This channel shouldn't break, or else you're not channeling the price, which honestly, when we progress that far enough, it will very much lend to probability that this is not a 1, 2, 1, 2, and rather a 3-wave move. Okay, because there's not really a way to get out of here with how small this structure is. I know it looks big to you, but it's not. Okay, but with how small this structure looks, there's not a way that you can't end up breaking that channel. All right, which is not a healthy way to progress. The original expectation, okay, which is why you want your base 1, 2s to be deep. I'll show you what I mean here. My mouse is acting up. Sorry. It was stuck. I'm going to draw with my marker the original expectation of the 1, 2. Okay, so it would be 1, 2, something like that, right? Nice progression, nice deep retracement, and then you're off, right? So here's our difference. When I take this and I draw this channel now, okay, it's much wider, all right? And when we come to make our next 1, 2, okay, now you can see, now if you just took this same structure, right, and moved it over here, and you go 1, 2, 1, 2, 3, 4, 3, and you break the top of the channel, right? So it's a shallower channel. Now you have a lot of confidence that what you are observing is a third wave, or at least the beginnings of it. Because when you come back and you're 2, then you use this channel as support. All right, that's what you get with a wide-based channel. All right, or some portion of the channel, right? It could, who knows? It could come back and hit the midline, right, and go, right? But something in this channel is now support. Whereas the way that it's developing as such, like this, without that deep retracement, you don't get that same luxury, okay? This thing either has to start really going right now, like I'm talking straight up. This thing just has to keep going and not stop to break the channel to come down to be able to find support on it, right? And looking at it and the RSI and the way it's developed and how small these waves are, that's not reasonable, okay? It's not a reasonable progression for this wave right now. This should be a good example here. Well, I have to go to a different chart to show you, but because this one was not the index chart, it started much later. Okay, but I'll show you that in a little bit. So we're talking about probability here. We're not talking about things that are possible and hopes and wishes and dreams. We need to be real with ourselves. Okay, so you have 1, 2, 3, baby 4 triangle. Sure, alternation, the rules met. 1, and then the shallowest flat pattern ever, right? You did. I don't think. How much did we retrace of this wave? Come on, my mouse is not working again. There we go. Da-da. Mouse is giving me fits. All right, so we retraced. We didn't even get a 50% retracement out of that. Okay. Here's the second issue with it, right? This wave 2-4 relationship. This is so, like, the whole purpose of triangles, okay, is to waste time so you can alternate with your 2. Okay, so you say this was a zigzag, you came relatively deep. I'd say it meets the guideline. This would have been your previous 4. You come right past it. Good spot to stop. It's a relatively deep retracement. All right, and then you got your 3. This triangle should have been much, much bigger. You should be alternating with time, right, as well as pattern. So if this was going to be a 4th wave triangle, because you got your extension in the first, no problem, not arguing with that. The 3, while it can't be the shortest, and it isn't, you already have an extension, so the 3, there's no reason for the 3 to extend, all right? But your 4, it really needed to waste some time to be a triangle. And then you can take this same wave 5 and come up, okay? But it didn't. That's the issue here. It took no time at all before it gave you your 5th wave. And yes, it is legal, and but that doesn't make it probable, right? It is just a thing that is wrong with it that makes the whole move unhealthy. And what I mean unhealthy is very likely corrective. So then you talk about the flat pattern. Okay, so you got your flat, no big deal. There's a couple ways you can do that. I have this specifically labeled right now as a zigzag, a really messed up looking expanded flat followed by 5 down. Okay, to make an expanded flat, but you can just as easily call it a normal flat. Okay, you could say that this was I prefer simple patterns, that's why I labeled it like this, but you can just as easily call this a double zigzag. All right, that a zigzag, and that an impulse. and call it a regular flat. It doesn't matter either way. You're winding up in the same spot, right? Anyway, your goal, your retracement goal, all right, is to bottom somewhere around wave 4, okay, just past it, right? So you can see that if we're going to call this the higher degree 4, right, then the market met that objective right here with the very first zigzag. It was already done, which in that case the count should have been 1, 2, 1, 2. This should have been a smaller degree 1, larger degree 1, larger degree 2, smaller degree 1, smaller degree 2, and let's go. Right? Before you would eventually get to a higher wave 1 to establish your wide base. Okay, if that was real, if this was a real wave 4, what should have happened is 1, 2, 1, 2, 3, 4, 3, 4, 5. Okay, you now have an impulse, and then you establish your base. Okay, and you get your wide base, and that's your 1 and your 2. That's what should have happened with that structure, but it didn't. Okay, which leads me to believe that this is not what this count suggests that it is. That this is not a larger degree wave 4 to end a first wave, followed by a super shallow retracement that does not establish a base. And then now we're going to the moon. Right? But the probability matrix says no. All right, so now I'm going to show you what I do think is the most probable course of action here. All right, so this is the bearish count. All right. Now remember, I said that this fourth wave on the other count does not probably appear to be a higher degree to match this one. All right, and this count here now reflects that on what is a more probable variation of how to get to an impulse. That you have your first 1, 2 here, completely normal. Okay, your third wave, fourth wave alternates now in time and pattern, and then expand it flat, and then you get a fifth wave. We don't have an extension yet, right? So you get now your fifth wave extension. 1, 2, 3, 4, 5. Okay, and you have a choice to make, right? Is that now wave 1? You still have your same flat problem though. Okay, so you could just as easily borrow this first wave that now I've labeled this A wave. Okay, you can just as easily borrow this and put it on the other count and then wind up in the same spot. So now you've eliminated your problem with this being the wrong degree fourth wave. Okay, but you still now have your flat problem. And you're not establishing a base. So what I'm proposing is that this is an A wave. All right, and what we are doing is establishing a base for a move down. And I'll show you that on a more macro chart after I'm done explaining this one, okay? So since the probability wise, this flat appears and seems to be unhealthy, that probably means that it is corrective, and that's why it looks unhealthy, because it is a correction. A, flat B, and we're just going to finish this impulse up to get a C wave. okay? And that's easy enough. You got 1, 2, 1, 2. You're in your third, okay? Whenever that finishes, I don't know when it's going. It doesn't matter. You'll know when it's finished whenever you get sideways consolidation for your 4, right? So we had zigzag, zigzag. 4 should be other things. We should get a flat. Should get a triangle, something, double 3, something sideways, okay? That wastes some time. All right. So I mean, you can take a guess by using the fib time tool. Okay. Whoops, I did that wrong. So you can measure how long this 2 took. I'm swagging it, okay? And then assume the 3 finished there, right? We'll do 1 to 1 in time, up to 1.618 in time. All right, out to 2.618 in time. Okay. None of these are targets per se, but it just gives you like a measurement of how far you can expect a 4th to go, right? And usually minimum expectation is going to be somewhere around here at the 1.618 in time. All right. So now you can visualize how long it's going to take. And then you get another 5 that should be parity with the first wave. So somewhere right around here. Then you're going to do the same thing again. Right, probably bottom somewhere around here. It's going to look like one big long consolidation, but it's actually different wave degrees, right? So your 3 would be here, your 4 is going to come down here somewhere. It could even come a little bit past it, you know, I mean, somewhere in this range. Assuming you didn't get a 5th wave extension here. It doesn't matter, you observe it, okay? You observe it happen. This is analysis, okay? And then your 5 to end up here somewhere, something like that. Then you can kind of like guesstimate where these labels are going to go, all right? And then you get a C wave, okay? Now the bullish count obviously is going to be 1, 2, 1, 2. But in the meantime, right, you can kind of guess like what are common relationships for a zigzag, right? It's either very lopsided or you get something that's just simply like 1 to 1, right? So you're going to come up here, something like that, maybe around 40K, all right? Somewhere in the neighborhood of that by the time this is all said and done and finishes, all right? So, you know, you can get some extensions in here. It can come up further, right? You just measure those as they come. But anyway, it's a simple zigzag. It's the simplest pattern of anything. You know, to worry about counting combinations, nothing. It's just a simple zigzag. Okay, so this is the bearish alternative. Now let's go back to the macro chart, and I'll show you where that fits in. All right, so here is the. I mean, all my charts are bullish, but this would be like the most immediate bearish option. Okay, this chart is actually, you know, people think is bearish. Okay, but this chart is actually more bullish than the other one, which would assume that we're completing a 5th wave. Okay, because remember it came down and expanded flat, and this is a 4. Okay, well that just means we don't have that much farther to go. We would just kind of poke this high. Okay, because you're going to want parity with your 1, right? So, and you're going to have to extend to get up there, and you're just kind of poke this high and then come back, right? This chart here, while assuming a correction in the meantime, it's actually more bullish. Okay, that gives you the opportunity not only to buy much lower, okay, but whenever it does finally bottom, like you have now no upper limit. You're not in a fit. You're starting fresh, and you're going into a 3rd wave, like to freaking $1 million or whatever the heck it is, right? This it's more of a bullish count, but I digress. Okay. what this would then allow you, okay, and I kind of drew the channel wrong on previous in the video, but I'm not going to go back. I'm just going to explain how it messed it up. All right. So essentially, like if you stopped here, all right, you have a very narrow channel. All right, so like say that's your one, right? Or if that was the end of your correction, right? You have a channel now to decline in price, which is now broken. Okay, so easy enough to say that from the bearish perspective, if you wanted to put your B here, well now you know, right? Now you can say that no, it's broken now, so that is not the count. Okay, so you move it up. All right, wherever this is going to end, we don't know yet. All right, but let's say, for instance, it ended right there. I don't know. I'm making that up. I'm completely guessing. Right? Now you have a more shallow channel. All right? And what you would end up doing would be flipping it because you want to find your true base. So what you would do is you'd come out here and say it ended here like this, doing kind of the same thing but in reverse, but you'd have this point already, right? And now you have a shallow channel to form your base. And when you do start progressing downward, okay, you want to see it break. Boom. Back test it. Go. All right. Whereas if it's too steep, it's not sustainable, right? A good example here is you can see your base 1, 2, right, on this move up, right? You can take your channel, connect these lows, and now you have a nice shallow base. And then you're simply counting and waiting for the base to break, back test it, and that's when you're going to get the majority of your move, right? If it's too shallow, then the advance or the decline, whichever way you're trying to impulse, isn't sustainable. All right, which lends to probability here. Right, you have a very steep channel at this point, which lends to an unsustainable rise. Which is why I'm assigning probability higher to this count, which is actually more bullish. People are going to complain about it, but this is the more bullish of the two counts. This could be a 1-2, right? We don't know yet. We'd have to see the reaction off of this low, however low it goes. I don't know how low it's going to go. I just kind of popped it in here. It doesn't. I have no target for this. It's just however long it takes, right? But in the end, what we have now, all right, we can talk about this, what triple zigzag, which was in the previous count, all right? The market, talk about objective, right? You had a 3, a 4, and the market had an objective to complete, and that was a 5-wave advance, okay, to clear this high. And then that's what you got. Now this would be counted as a diagonal, all right? And it follows all the rules, all right? It would be an expanding diagonal. All right, 4 does not have to go into the price territory of 1, but it commonly does. All right, in this case it didn't. All right, but a very clean impulse down. Okay, and a few things Now there's some things I don't like about this count too. If we go bigger, let's go back to the monthly count. There's problems with every count, but no, let's go to the weekly. Sorry. 1 week. There we go. Okay. So this now then assumes this is in logs, so it looks like that this third wave is smaller. I promise you, it very much is not. This third wave is absolutely gigantic compared to this. All right, but this isn't log, so here, let me take it out of log so you can see. All right. Like the labels are still there. Like I have to really like move this to get it popping here. All right. Yes, the third wave is longer. All right. So just to put that in perspective. Okay, but this is in log just so you can see kind of like a relationship between waves. All right, you don't really have alternation here. You have a zigzag and you have another zigzag. All right, which is why the other count exists to begin with. But it's not a rule. Okay, it meets the rules of an impulse. Okay, you came up to 1,200 bucks here on the top of this wave one, and you retraced to 3,200 here. All right, you did not intercede on it. The other count assumes 1, 2, 1, 2, right? Because you're lacking alternation here. However, I digress. We have to give it serious consideration. And I made a video about this a while back. Basically, I called it the count that no one's talking about. Okay? Because even though I don't like the relationship between the 2 and the 4 here, it is a legal one. And it coincides with a very major top in pretty much all world markets. Okay, and I have while markets aren't totally correlated all the time, um, Bitcoin has proven that over a 10-year span, it put in an impulse since its inception, and in the very same time frame, the stock market did the exact same thing. Okay, so while I think it's correlated over a decade, okay, or even over several year periods, right? The day to day, just because the stock market's down doesn't mean Bitcoin's down and vice versa, okay? But over a long period of time, I think it's proven that it is correlated from an overlying trend perspective, okay? And that being said, we have to give this count credence, especially since we got a clear impulse down into this A wave. Now, it could be the end of something, like I said, it could be this larger degree 4, but that it came so deep and so close to invalidating itself, okay, that it seems more unlikely, okay, it's not invalid, but it seems more unlikely that this is a fourth wave, okay. Um, it could be a 1, 2, 1, 2, but that seems very unlikely as well because this took well longer in time than that took. Okay, again, not a rule, but at some point you need to start calling a duck if it's sitting there quacking at you. Okay, you can't hope and wish what you want into the market. You just have to ascertain the probability and trade that accordingly. Okay, which this count, I think, although I don't like the 2-4 relationship, is more probable. All right, that you got a first wave down or an A wave, one of the two. Okay, there's no way to know that yet. Okay, but perfect impulse meets all the guidelines, um, to include the reaction after the triangle, like this brief, very short fifth wave is exactly what you were supposed to get after a triangle, and that is what we got. Um, So all that being said, okay, what this now does for us, assuming this is going to be a zigzag, right? I didn't put any, I should put labels on here. I didn't put those yet. Let me delete that. I'm going to put some lower degree labels on it. What do I have on this? Cycle degree. Okay. We're going to do, I'm going to put it right here in front of you. Okay, so we're going to go A, B, C, wherever that ends. I don't know where it's going to end. Okay, but that'll be primary, and I'll change the color to make it look pretty. Okay. All right. That gives you a deeper retracement for this either B wave or A wave. Okay. Now I will say this, if we're going to talk about probability. All right. From a B wave perspective, then it should have ended here. And then we're going to go into a C. The fact that it's continuing on like this to give you a bigger zigzag than first it expected more probably means that this is not AB and that it's 1, 2. Okay, but that's a conversation for a whole nother day. Let's get through some invalidations first over the next year or so, and then we can start talking about that. All right. But here we are. We're just simply waiting from the other micro count for then this to finish as a zigzag, and then we'll be off to the races. Okay. That's all I got to say about that. Until next time, consider coming into the Discord if you want to talk. There's a free trial there. Hit that like button. Stay subscribed. We'll see you.